move on now to the 2024 State Budget Plan. The government remains optimistic about the Indonesian economy in 2024, as reflected in the 2024 State Budget Plan proposed to the House of Representatives recently. In the draft state budget, the government sets GDP growth target of between 5.3% and 5.7%, and to keep the inflation rate at 1.5% and 3.5%.
The government and members of the House of Representatives, or DPR, are currently discussing the state budget plan for 2024, which will be the last year of President Joko Widodo's second five-year term in office. The 2024 state budget plan, which was submitted to the House in May, has been formulated in such a way so that the fiscal policy will be able to cope uncertainties that might arise as a result of rising geopolitical tensions and global economic uncertainties, as well as to ensure peaceful presidential and legislative elections, which will held simultaneously in February next year. Amid such conditions, the Indonesian economy is projected to grow by between 5.3 and 5.7% year-on-year. Inflation at between 1.5% and 3.5%. The exchange rate of rupiah against US dollars in range of 14,800 and 15,400 per US dollar, while the price of crude oil is set at the range of 75 to 85 US dollars. Oil lifting at the range of 592,000 and 651,000 barrels per day, and gas lifting in the range of between 1,007 to 1,058 barrels of oil equivalent per day. Based on this macroeconomic assumption, the government projects total revenue of between 2,719 trillion rupiah and 2,865 trillion rupiah, or about 192 billion US dollars, which increases by 11.70% from 2,463 trillion rupiah in the 2023 state budget. Tax revenues are projected to contribute between 2,280 trillion rupiah and 2,355.8 trillion rupiah, an increase of approximately 9.60% from the tax revenue target of 2,021.2 trillion rupiah in 2023 state budget. Furthermore, non-tax state revenue in 2024 is targeted at between 436.5 trillion rupiah and 504.9 trillion rupiah, an increase of 2.1% from 441.4 trillion rupiah in the 2023 state budget. Meanwhile, grants are expected to reach between 2.3 to 4.6 trillion rupiah. Total spending for 2024 is set at between 3,215.7 trillion rupiah and 3,476.2 trillion rupiah, or an increase of around 14.53% compared to the spending target in 2023 state budget, which amounts to 3,061.2 trillion rupiah. The total spending for 2024 consists of central government spending of between 2,400.7 trillion rupiah and 2,631.2 trillion rupiah, and spending for regions and villages of between 815 trillion rupiah and 845 trillion rupiah. The 2024 state budget deficit is set at 496.6 trillion rupiah and 610.9 trillion rupiah, or between 2.16% and 2.64% of GDP. This deficit increases from 2.84% in the 2023 state budget. The 2024 state budget bill, which has to be passed by the House members sometimes in July, will be officially unveiled by President Joko Widodo in his state address at the commemoration of the Independence Day on August 17th. If we look closely at the government's revenues and GDP growth targets, the assumptions given by the government look quite high, as uncertainties will likely continue to cast a shadow to global economy. Whether the government could achieve the revenue target is also questionable, because unlike in 2022 and 2023, commodity prices are projected to remain stagnant next year. In 2022 and 2023, the government's strong revenues were driven by high commodity prices. But hopefully, the expansion of the tax base following last year's tax reform and amnesty program will be able to boost tax revenues next year. With such unfavorable condition, the government will likely continue to rely on household consumption and private investment to achieve the GDP growth target of 5.3 and 5.7% year-on-year. Also, hopefully the general elections will run smoothly as expected so that the political stability could be maintained. With this, economic activities can run without interruption and can provide more jobs for the people.
Let's move on to our dialogue today, where we will talk about a review on a 2024 state budget plan. The government and the House of Representatives DPR are currently discussing the state budget for 2024, which will be the last year of President Joko Widodo's second term in office. Right now we have in our studio, we have Pak Satria Sambiantoro, Chief Economist at Bahana Sekuritas. Welcome, and we're happy to have you here. Today we will be talking about the 2024 state budget. I'm sure you have reviewed it, I'm sure you know about it. The 2024 state budget is considered to be too conservative and also less expansive. What do you think about it?
Yes, I think in terms of the budget perspective, we have to distinguish between the election year and non-election year. I think if we compare next year's budget compared to the previous years, we would agree that this is quite an expansive budget. I agree with you. However, if we compare this like 2024 election budget compared to the previous election cycles, I will say that this is quite conservative in a sense, because we have to spend a lot in terms of the election related spending. My assumption for next year's budget would amount to I think roughly like 80 trillion rupiah just for the election alone. So in terms of the election cycle, I would say that this depends on how you look at it, but from the budget perspective, posture-wise, this seems quite a realistic budget to achieve.
So it's a realistic budget that we can achieve for 2024. Yes. All right, now next year, the state expenditure, they say, will focus on several things, such as improvement of human resources, economic infrastructure, education, and also reduction of stunting cases and poverty. What do you think of these priorities?
Yes, I would say that the priorities remain a challenge. Some of the targets aimed to be achieved by President Joko Widodo has not been achieved yet, mostly because of the COVID. I would say that the priorities for like next year most likely would relate to the domestic household consumption rather than infrastructure. Over the past 10 years, we have spent so much in terms of the infrastructure spending. And I heard that over the past 2 years, we also unleashed the capital injection plan for the SOEs. That's also related to the infrastructure. However, the financial markets largely expect that in the next 2 years, this year and then like next year, most of the spending allocation will be related to the household consumption, such as the social assistance funds, such as like those related to the unemployment benefits and so forth. So like we can grow the household consumption and our headline GDP growth.
So focusing more on the household consumption instead of on the infrastructure due to the COVID-19 pandemic.
Yes, I would say that from like this year and then next year, the capital markets, our investors have high hopes that this election-related spending, this social assistance funds that will be injected in the next 2 years, would also help prop up the market, would also help the like domestic consumption, and in turn will also like benefit the earnings of the consumption companies in Indonesia.
Now, putting our priorities in those areas, do you think we still have enough to support our economy as a whole, though?
Yes, I would say that our economy is doing just fine. We have recovered greatly after the pandemic. I think if we compare our economy relative to the other emerging markets, who have suffered a lot because of the pandemic and the rising debt burdens, Indonesia is like doing just fine. Like between 4% to 5% economic growth is very, very good compared to the recession threats like haunting the developed markets. You see that policymakers in the UK, in Europe, in US are now grappling with the high interest rates, are now like grappling like with the recession threats. Well, our economy is like doing just fine.
Now, some say that, now people are traveling, people are spending, but our forecast for next year is still somewhat gloomy of the world's economy, right? But then Indonesia's GDP growth target is at 5.3 to 5.57%. Do you think this is realistic, actually?
Yeah, if like where I have to choose like which assumptions that I considered as like most challenging or like difficult to achieve, I would say that in terms of the economic growth, we are penciling only 4.8% of GDP growth for like this year. And like for next year, we would be like expecting somewhat like a between 4.8 to 5.2%. It's very, very challenging to achieve a 5.5% as stipulated by the government in the state budget draft. However, I think since this budget is still discussed with the like with the parliament, I think in the like the end game would be they would like conclude with a more realistic assumptions. However, like a 4.8% to like 5.4% is not too much a difference.
Right, but why do you think our government is so optimistic though? I mean, like in contrast to the world's economy, still seeing that it's still going to be somewhat gloomy next year.
Yes, I think like I must say that the assumptions of the commodity prices remain largely like very optimistic. We must also remember that we are expecting some kind of like a slowdown of the commodity prices.
Right.
Indonesian economy remains dependent to the commodities because of like 30% of our exports comprise of like coal, like CPO, and then nickel. So like for like next year, I don't think that if the commodity prices just stay flat, or like if like the commodity prices go down because of the recession like in the developed market, I would say that in terms of the exports will push our headline GDP down.
Right. So Indonesia's main export commodities are expected to remain flat, somewhat flat. Do you think our exports will provide a significant contribution to our GDP next year then?
Yes, I would say that this could be quite challenging because of the slowdown in the global economy. If like you recall, Louisa, that we are penciling like the whole financial markets are actually expecting the Chinese economy to grow because our economy, our Indonesian economy is like very linked to the Chinese economy. However, after they reopens the economy, it turns out that the economic data coming out from like China were not as strong as many had anticipated. This is why that in terms of the exports, because we export our goods mostly to China, I think we remain reliant to how Chinese economy will perform. If they don't perform like really well, I don't think our exports could grow too strong as well.
Yeah, so as usual, we're still strongly dependent on China.
Yes, true.
Right. Next year, the government is to increase the spending for social protection to 503.7 trillion rupiah. Do you think the social protection fund can help the increase of our household spending?
Yes, I think like this will be crucial. Like beyond the 500 trillion estimated for the social assistance funds, I would say that the delivery and the execution among the ministries, among the regional governments will be very, very imperative, will be very crucial. We have witnessed how the local governments actually, they have been allocated so much funds during the pandemic, but they failed to like disburse the funds effectively.
Exactly.
Yes. So like I would say that in the next 2 years, like 2023 and then 2024, I think the delivery like will be important, especially among the regional governments and the central governments. And we must also like remember that in the next 2 years, I think most of the like our policymakers' minds are already embedded in the elections.
Exactly.
But they must also think like how to like execute the programs like very well, and how to still have this like reform-minded mindset. So we can push the like spending to help the economic growth.
How do you think they can regulate this better, though? I mean, like as you said, because the election is coming,
Yes.
how do you think they can make sure that this spending will be regulated and goes to people who needs it?
Yeah, I think it's like really crucial for the central government to really supervise what's happening in the local government. Currently, like there's a gap. For instance, that you witnessed like yourself what happened in the road developments in Lampung.
Yes.
Like for instance, that the central government must intervene. President Jokowi must go there directly to see for himself that hey, the infrastructure projects here are not like doing that well.
Yes.
So like I expect that the central government must also take the initiative to like really see in terms of the budget that they spend, in terms of the budget and the funds that they really disburse to the local governments. They must ensure that the local governments really disburse the funds to like those in need. So like eventually it's a positive correlation to the economic growth.
Right. Well, this is still a challenge for our local government, and it is still an ongoing challenge.
Yes, and like fortunately, like next year, I think the local governments, because of the simultaneous elections, all the local governments would come from the representative from the central government. You see that, for example, like Pak Ganjar will step down by the end of this year. Pak Ridwan Kamil, like Pak Anies has already stepped down. So the central governments would have their representative in the local governments. So like they must work in sync, because in terms of the budget realization, it's always the local governments that always disappoint. So yeah, so like hopefully by having this like central government representatives, they can execute the budget more effectively and to spur economic growth.
Right. Now, the government is proposing a low budget deficit at below 3% for the 2024 state budget. This means that the government will rely much on tax revenues, obviously. Do you think the government's target to increase tax revenues by about 10%, is this still achievable?
Yes, in terms of the tax revenues, we are now in the crazy rich Indonesia position, because we are in a, right now because of the like soaring commodity prices, like soaring CPO like prices, coal. We are in an excess cash surplus position, and Finance Minister Ibu Sri Mulyani has already indicated that they might not issue more debts by the end of this year. So I think it's fair to say that for like this year, our budget position is in very, very strong shape, is in a very healthy position. However, next year could be a different story, because first, from the revenue side, we are not certain that the high elevated prices of the commodities could sustain. And the second is from the spending side, we are expected to see the spending to increase significantly because of the elections, right? And then like you see that the capital injection for the SOEs. So this year we are in an excess surplus position. Next year I think we will be more cautious to see like how like the budget, and like don't forget that just last year we increased our value added taxes, the PPN, pajak pertambahan nilai, from 10% to 11%. You see that the goods in the supermarkets are now like becoming slightly more expensive, and that has actually contributed positively to the state revenues. For like next year, we will not have like any more tax hikes, so achieving the state budget target will be a quite challenging job.
Right. Next, I'd like to talk about the rupiah exchange rate. The 2024 state budget have set the rupiah exchange rate of between 14,700 and also 15,300 per US dollar. Now, in your opinion, what would be the realistic value of rupiah next year?
I think in terms of this, in terms of the rupiah and the FX assumption, I would say that, like previously I said that, hey, I think the GDP growth is too optimistic, but in terms of the FX, the rupiah, I think the government is very conservative. I think too conservative on this specific point, because like next year, I think the financial markets widely expect the U.S. Federal Reserve to cut rates.
Right.
What happens when the U.S. Federal Reserve like cut rates? When the central bank cut rates, their currency tend to weaken. So assuming that like BI just keep the interest rates flat for like this year or like next year, and the Fed move to slash the interest rate first, I think we can expect the slight depreciation in the dollar and consequently the slight appreciation in the rupiah. I think the rupiah could go stronger beyond than that. I think I'm expecting somewhere like between 4,000 to 14,000 to 14,500 for like next year in terms of the US dollar.
From your point of view, Mas Satria, overall, where do you see our economy will go for 2024?
Yes, I think because of this like election-related cycle, normally like during elections, the consumption tend to be strong because like there's additional spending from the election money, right? Well, however, in terms of the investments, normally the foreign money just don't come in. Why? Because like investors,
it's risky.
Yes, investors think it's risky during the election. Investors like to see certainty. They would like to see like who's winning first, who's like having the leadership, what are their policies. And remember that the uncertainty for 2024 will come from two fronts. First is like the central government, because we don't know like who's the next president going to be, and the current president could not nominate himself for the third term. And the second is the local levels, the regional levels. We will have the simultaneous elections. That means we are expected to see the new governors, mayors, regions, and so forth. So if you are an investor, you see that, hey, the central government has this uncertainty, the local government has this uncertainty, I will just like put the money, but maybe 2025, like after you guys settle like all of your business.
Politically.
Yes, after the political issues have been settled. So it's quite a challenging year for the investments, to be honest.
Right. Now that we have actually moved on to an endemic state, I mean, why do you think is the world still in a gloomy condition in terms of economy?
Yeah, I think it's like because like we are all, it turns out that we are all affected by the pandemic. No matter how rich you are or like how poor you are. Well, before the pandemic, our income is like 100. But after this, we realized that our income is like only 90. Like we have this like excess savings because during the pandemic, our spending fell significantly a lot. Like our spending from like 80 just like went down to like 50. And then after like the pandemic, we spent all of our money for like traveling, reopening. Hey, we don't have any money left anymore.
Right.
And that's what's happening in not only in like in Indonesia, but also in China. You see that the people in like China, you see that the Chinese tourists are not yet coming back to Bali.
That's a good point.
Yeah. So like all of the global economy, they realize that their income level is significantly lower. Well, however, because of the high interest rates, high inflation, you cannot buy the same goods for the same prices.
That's correct.
Lower income and then the higher prices. So, yeah, I think the global economy remains in the gloomy mood because of that position.
When do you think, what year will we pick up from this?
Yes, I think the expectations will be like for like next year for the central banks to slash interest rates. So if we slash the interest rate, that means that we can like consume more. Like bank lending like will be cheaper. So like after this, hopefully the situation will be better. However, I will caution that interest rates in the US, it used to be like 0%, right? It used to be like you can get like a mortgage for like almost 0%. Well, however, it's like 5% right now. And even if the US central bank cut interest rate, it will not go back to like 0%. It will go back to like 3% or like 2%. So like that means interest rates level are still higher. That means that, well, I think like in the next 2 to 3 years, I think we will adjust to this new phase of like higher interest rates for like longer.
We still need some time to adjust.
Yes, I think
All right.
consumers will also need to adapt.
That's right.
As well.
Okay, Satria Sambiantoro, Chief Economist from Bahana Sekuritas. Thank you so much for coming and chatting with me.
Thank you,
And
Lisa,
we'll
for
see you again
inviting.
next time.
See you again.